So, hey, I want to talk to you guys about misconceptions about insurance because everybody has these misconceptions. I hear these every single day. Almost every day, I get these misconceptions every day when I'm buying policies. One is, I've already paid for my insurance for the whole year, so I need to wait till renewal. No, you don't. The insurance company is legally bound to give you a pro rata refund for every premium you've paid in advance of your cancellation date. So whether you pay annually or you pay monthly, whenever you stop the coverage, they have to give you your money back from that cancellation date to however far in advance you've paid. You can cancel any day, any time. And that leads into my next point about the impound account. If you've got a mortgage, most people nowadays have a mortgage and they have their insurance impounded in that account. That's easy stuff. That's what we do. It's all paperwork that goes on in the background. What happens is the mortgage company pays the insurance company for the whole year, and then they leak that out to you on your monthly mortgage statements, and then they recover that money. Mm-hmm. So when you start a new policy, the insurance company mails, which takes 3 to 5 business days to mail, and then another 3 to 5 days to process, so a couple of weeks for them to receive it, change your impound account, and go, oh, I see that you've started new coverage. And then simultaneously, they're going to get a cancellation notice from your other company, in which in California, agents cannot cancel your policy because we are not a named insured on your policy. We have no binding authority on your old policy. So you have to call and cancel, and then that company sends cancellation notice to your lender. So your lender is receiving a cancellation notice and a new business request. So they send out a new payment to the new insurance company, and then the old insurance company sends you a refund. So that means that money, whatever is refunded on your homeowner's insurance, needs to get put back into your impound account. Otherwise, you're going to have an increase in your impound account, which is not what you want. Mm-hmm. So to sum that up, you don't have to do anything other than when you get a refund check, it's not free money. That refund check needs to go back into your impound account. Or you could cash it and then write a check to your mortgage company.
When I did mortgages, we had so many occasions where we'd be putting together their loan, and we'd be, working up an Encompass, and we'd have their current situation and then their proposed situation. And then we start, once we get into docs and we start, sending disclosures out and so forth, and we start requesting we get this and requesting we get that. We come back, and their inbound account would be underfunded. Mm-hmm. And then all of a sudden now they're having to fork over another $150, $200 a month to cover all of those things, and that's probably why.
That's it. They changed their insurance, and they didn't do their due diligence there. So that's a misconception. Make sure that you're refunding your impound account.
They change your insurance, and they're sitting there thinking to themselves, look at this, I got more money. Well, now you're underfunded, and now you're going to be paying that money twice next time.
Right, yeah. Secondly is loyalty. People think, well, I've been with X company, State Farm, Farmers, Allstate, that's what I usually hear, for 20 years, and I have loyalty to them. Okay, well, how much is your loyalty worth? If I can save you $300, $400, $500 a year, I understand loyalty and I respect that, but if you're talking apples to apples, loyalty wins 100% of the time. But when you're talking $500, $1,000 sometimes, isn't that worth your time to start a new relationship in which I'm going to be here indefinitely? Whereas most people, their agent has moved on and their account has been reassigned to a house account or, basically the call center. And along with that, people think that because they've been with them for 20 years that they're going to get better claims service or the prices are going to get better. And no, that's, again, not the case. There's statutes in California that say they have to treat every customer the same, whether you've been with them for 1 day or 100 years. It doesn't matter. They have to treat everybody the same. So you're not going to get any privilege necessarily unless you're maybe the president of the insurance company. There sometimes is a VIP checkbox. But all right. I hear this all the time, especially with folks that, let's say, qualify for AARP. They think that their premium should go down every year because they've been with a company for so many years. Mm-hmm. If that was the case, let's walk that through. That would mean that by now, the insurance company should be paying you if it went down every year.
Especially with inflation and so forth. It takes more paper to pay what you're due.
Yeah, the cost of cars are going up. The average car on the road 30 years ago was probably $10,000. Now it's $25,000.
The other thing, it's funny, I don't want to get into a tangent, but the average age of a vehicle now is 11 years old on the road. That's the average age of a car on the road. A couple of things are the reasons for that. Number one is that the vehicles are so much more expensive. It's harder to get into, and cars are made better today. Technologies are better, and cars last longer than they used to. But
which makes insurance go up.
Absolutely.
So the cost is always going to go up, let alone from inflation, but just because people are buying more expensive, higher technology cars, and that means whether it's your fault or not, the claim is going to cost more than it did 20 or 30 years ago. So when you buy a policy, let me, again, break this misconception. Every insurance company, their rates are eventually going to go up. They're never going to stay the same. There's nothing in their contract that says you will always have this price. The only thing that says it is your term, whether it's 6 months or 12 months, they're guaranteeing it. So if you've got a good price, lock it in as long as you can. Do 12 months. There's no point in doing a 6-month policy, because then that gives them an opportunity to say, well, let's file for a rate increase this year because we want to make more money. Let's raise the rate in 6 months. And it also means that if you have a 12-month policy, if you start today and get in an accident tomorrow that's your fault or a ticket, 6 months later, they can add on that point, whereas a 12-month policy, you got to wait till next year.
Yep.
So that's another misconception, is that your rate's going to go down as soon as your point falls off. No, you have to wait till renewal until that rate will go down, or if you added a point, until it goes up.
How can people legitimately save money on their insurance? Real quick, we got like 1 minute, but how can they legitimately save money on their insurance without hurting their coverage?
They need to get quotes from multiple different carriers. And
which goes through a broker, and then the broker does their work. That's
right, and that's what I do.
How do we get in contact with you?
You can go to bengodinez.com. That's BenGodinez, or even better, go to opera.com, AWEPRA, opera.com, and click on Ben Godinez, and you get a link right to my website. Click Let's Talk, fill out the information. Takes you less than 2 minutes.
You got it. We'll be right back.
Stay with us on the Good Life Radio Show.